Security or asset? This is a question left unanswered for most of the cryptocurrency market's history. When assessing cryptocurrencies, regulators fail to outline a clear definition, and in the process categorize projects that are similar in design differently, forcing both developers and investors into a corner. Welcome to Shrimpy, a leader in automated portfolio management software and cryptocurrency education. In today's video, we will address an event that has been on everyone's mind since Monday: regulations. With the SEC stepping in to possibly ban cryptocurrencies deemed to be securities, it's prudent to consider the after effects of such an action. But before explaining what happened this week, we'd like to take a brief moment to announce that the Shrimpy Academy now has special cryptocurrency courses dedicated to taking your blockchain education one level higher. If you're unsure about where to start or how to study cryptocurrencies in general, we recommend checking one of our courses at academy.shrimpy.io to see just how easy it is to learn how digital assets work. This week begins on a stark note as Securities and Exchange Commission Chairman Gary Gensler reveals his rigid stance on ICOs. Following the footsteps of his predecessor, Jay Clayton, Gensler spoke at the Aspen Security Forum and said that ICO tokens are mostly securities. And let's not forget the most important statement in this entire ordeal. The chairman believes that many of today's cryptocurrencies may in fact be securities. Here's the full statement. Generally, folks buying these tokens are anticipating profits, and there's a small group of entrepreneurs and technologists standing up and nurturing the projects. I believe we have a crypto market now where many tokens may be unregistered securities without required disclosures or market oversight. These tokens may allow markets to be manipulated, which in turn could harm investors. As a reminder, the latest statement mirrors earlier comments on Gensler's belief that stock tokens and stable value tokens backed by securities should also qualify as securities. If enforced, such a measure would force issuers of a large number of cryptocurrencies to register their tokens and follow federal law. During other parts of his speech, Gensler also highlighted the fact that although all tokens are individual cases in the legal sense, the likelihood that a single exchange exists does not have at least one security listed is highly unlikely. So with all that said and done, what does this mean for the cryptocurrency market as a whole? As we already know, regulatory uncertainty is never good, and in this case specifically, we really don't know the extent of Gensler's goals yet. Will America's #1 financial regulator take a hard stance on crypto in 2021? And if so, what are the implications for altcoins and general market stability? We're no strangers to security talk. As already mentioned, the SEC's previous chairman has also believed that many cryptocurrencies are illegal under US laws. However, nothing came out of it, apart from a few projects being shut down and fined. But considering that crypto's market size increased by numerous times over the past couple of years, it might be wise to consider Gensler's speech as something more than a threat. In fact, the chairman called out for congressional approval to heighten the agency's authority in crypto matters. As stated during the conference, Gensler wishes to prevent transactions, products, and platforms from falling between regulatory cracks. Another significant decision would be to allow the SEC to oversee cryptocurrency exchanges based in the US. His bearish view on the market stability was reiterated when the chairman briefly commented on recent Bitcoin ETF requests. Although Gensler did not comment on these requests individually, he has made a general comment about the lack of need to create such funds as similar crypto-related financial instruments already exist. While not much is known about how deep of an influence Gary Gensler's comments had on recent price action, it is evident that Bitcoin began dropping exactly one day before the news broke out. Moreover, buying intensity has significantly subsided right after Gensler's statement went public. Within the span of 2 days, the market's top cryptocurrency dropped from $42,000 to $38,000, marking a total fall of 9.5%. Before we go into analysis mode, let's make a quick recap and summarize the events known to us so far. Near the beginning of the week, the chairman of America's top financial watchdog issued several statements concerning the state of the cryptocurrency market during a securities conference. SEC Chief Gary Gensler believes not only that all ICO tokens are securities, but that many of today's cryptocurrencies can be deemed to be illegal under federal laws. Notably, Gensler said that all cryptocurrency exchanges have at least one security listed on their trading platform, but that each asset is a case of its own when considering legal matters. The chairman refused to comment on the probability of approving Bitcoin ETF requests, and instead commented that there is no need for ETFs as similar financial instruments already exist. This was followed by Gensler calling Congress to provide the SEC with higher authority and autonomy in overseeing cryptocurrency exchanges in the hopes of gaining a foothold in the domestic digital asset market. In return, the statements shared near the beginning of the week have possibly had a negative effect on the market. Bitcoin suddenly dropped on Monday by a high margin, and on Tuesday, buyers were nowhere to be found. Let's get back to the main analysis. What does all of this mean for cryptocurrencies, and what can we expect to happen in the future? It's painfully obvious that a bolder stance on regulation can lead to tighter restrictions in other areas of the market as well. Highly volatile and unregulated financial instruments commonly seen in the DeFi market, like yield farming and flash loans, can potentially face regulatory actions. In fact, we already have an official confirmation that Gensler wishes to tackle 7 key segments in crypto initial coin offerings: trading venues, lending platforms, stablecoins, DeFi custody, and exchange-traded funds. Among this list, DeFi ranks as the most attractive option for regulators, considering that the newest market segment has, thanks to its high level of decentralization, absolutely no oversight from third parties. Everyone's able to trade on DeFi centralized exchanges, and it's not possible to pressure a platform like Uniswap or Yearn Finance, at least not in the same way as a huge centralized exchange such as Binance, FTX, and Kraken. So although the main focus might be on ICO tokens and other so-called securities, the play at hand might be for regulatory agencies and governments to entrench themselves in DeFi and gain at least some sense of control. With a total market size of $70 billion, decentralized finance might not be a top priority in comparison to other high-value targets. However, it's important to keep in mind that DeFi saw massive growth over the past year, and that the SEC might wish to control the sector while it's still small. Another possible outcome is that by focusing on minor issues, the SEC can indirectly increase its control and authority over cryptocurrency exchanges, as well as increase the power that it has in these matters. Since centralized exchanges still represent the focal point for liquidity in today's environment, controlling crypto exchanges would be closely the same as controlling the crypto market itself. If that's the case, this week's news might be more dire than we think. Truth be told, regulations are not always a bad thing. The crypto market is still a wild west, and there's no denying that inexperienced investors are at harm from those looking to exploit the complexity of cryptocurrencies. But at the same time, it's equally unwise to let a regulatory agency gain leverage over major liquidity distributors, such as exchanges, and decide the fate of some of our favorite cryptocurrencies. Cryptocurrencies can live on without regulation, but can they transform into a mature market on their own in the absence of interventionism from the SEC? Share your thoughts in the comments below, and make sure to leave a like and subscribe to our Shrimpy YouTube channel.